Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning to all. Today will be the Thursday, the 14th of August, 2025. So, as usual, before we kickstart our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, give me 1 second just to make sure that everything is working. I guess the voice is good, yeah. All right, so as usual, before we jump straight into the gist of our daily dose, which is the intraday technical outlook on the 4 major US dollar pair, the 6 global major stock indices, and the 2 commodities market, which is the gold XAU/USD and West Texas crude oil that we covered on a daily basis. We have a quick look on the first segment of the daily dose, which is the relevant news flow, economic data release that has a potential impact on the intraday movement of these broad-based cross asset classes. So let's start with yesterday's economic data release or relevant news flow that has an impact on the these major broad-based cross asset classes. So yesterday was a very big movement. Was rather a significant news flow, I would say, out from US, where we have a key US White House administration official, none other than the Treasury Secretary. So we know that the Treasury Secretary has a pretty much significant influence towards the global financial markets. And yesterday, U.S. Treasury Secretary Bissett, he actually kind of jawbone the U.S. Federal Reserve to be much more dovish. And we still recall that currently U.S. President Trump is rather in a kind of not so rosy relationship with Fed Chair Powell, because Fed Chair Powell, since the start of this year, he has been advocating a not so dovish stance in terms of monetary policy, urging the Fed to be more erring to the side of cautious rather than be more aggressive in cutting rate cuts. So yesterday, Bissett actually did a public interview with Bloomberg, where he actually mentioned that the Fed should actually lower interest rates by 150 basis point or more. So we're talking about 150 basis point is 1.5%. And still recall that in the latest US Federal Reserve dot plot, where every quarterly, the US Federal Reserve will release their projection in key US economic data, and they also will release what's the expectation will be where the Fed funds rate will be by the end of this year, by the end of next year, and the long term. So by the end of this year, the latest dot plot, the median projection done by the US Federal Reserve officers, they're only calling for potentially 2 interest rate cuts this year. That means that's about only 50 basis point. But whereas Berset actually urged the Fed to do more by cutting to 150 basis points. So that's actually 100 basis point much more. And even he also did mention that over here, the Fed could actually start with a 50 basis point rate cut in September rather than a 25 basis point cut. So since the release of that rather weak non-farm payroll data, and as well as that so-called mixed bag of CPI data that was released on Tuesday, market participants in the Fed Funds futures market, as being compiled by the CME Fed Watch 2, has kind of indicated that the Fed will have a high chance of cutting rates in September. All right, so before I jump into the CME Fed Watch 2, there is some kind of disturbance over at my ground. So let me fix my so-called that voice over here. All right, so I'm not sure what's going on over here. So let me fix it. Yeah, give me a minute. Okay, I guess it should be better now. All right, should be better, much better now. Yeah. So okay, now let me share with you what is the current pricing of this CME Fed Watch 2 after US Treasury Secretary Bissett rather dovish jaw-blowing remarks in his interview to Bloomberg yesterday. So based on the CME Fed Watch 2 right now, we have seen a very huge increase jump that the market participants in the Fed Funds futures contract now is pricing almost 100% certainty here. So 94% chance that the Fed will bring down the interest rate, the Fed Funds rate to 4% to 4.25% based on the current rate of 4.25% to 4.5%. So that was a big a jump from a month ago that was only about 57%. So then if you look at the aggregated tab over here, okay, what we could see, so let me, okay, give me a minute, hopefully everything works fine right now. Okay, give me 1 second, let me adjust my screen. All right, so this should be okay. So let me expand my screen for you guys to have a better view of the charts, or better view on my screen. All right, so what you could see over here is that we also have a high chance of 72% right now that the Fed will move its second rate cut by another 25 basis point to bring it down to 3.75% to 4% on the subsequent meeting on the 29th of October. And right now we are looking at a slight chance of slightly above 50%, which is 54% right now, as being priced by the CME Fed Watch 2, based on the trading behavior of the Fed Funds futures traders in the Fed Funds futures market, that before the year ends on the last meeting of 2025, which is the 10th of December 2025 FOMC meeting, the Fed Funds, the US Federal Reserve may have a chance of 54%. So that was actually a jump as well. So previously, market was only looking at 2 interest rate cut before 2025 ends. So right now there's a slight chance of above 50%, which is at 54% right now, that the Fed may engineer a third cut before 2025 ends, which is on the last meeting of 2025, the 10th of December FOMC meeting, to bring it down another 25 basis point lower to 3.5% to 3.75%. But that is still way below the desired rate of Treasury Secretary Bissett, where he actually urged Fed to do more by cutting 150 basis point or more. All right, so by cutting only 3 times of 25 basis point each, that's only 75 basis point cut. All right, going forward. All right, so that's much lesser than what the US White House administration wants the Fed to do. All right, so what is the significant flow impact on the global markets by this jaw-blowing from US Treasury Secretary urging the Fed to be much more dovish than their current stance right now? Is we start to see a further sell-off in the US dollar. So those who recall followed my daily dose of market insight since the start of this week and even last week, we have been advocating a bearish US dollar stance, because we reckon that whatever corrective rebound that is being seen from the start of end of July, end of June, all the way up to the 4th of August, that has more or less has been ended. And right now we are now entering into a new potential bearish impulsive down leg of the US dollar index within its major and medium term downtrend that is still intact since the start of this year, as the US dollar index still continues to trade below the 200-day moving average. So based on yesterday's price action, very clearly yesterday it has a daily close below the 50-day moving average over here, after breaking down below the 20-day moving average on Tuesday, which is also a key risk event day, that is the release of the US CPI data. So given the fact that price action now has been rather weak on the US dollar index, and the US dollar index also breaking down below key technical elements, which is the 20-day and the 50-day moving average subsequently in the last two sessions, that actually increases the odd of a start of a new bearish impulsive down move sequence on the US dollar, given the fact that there's a high chance right now that whatever rebound that we see from 1st of July, this level here, let me share with you. Okay, where is this chart over here? Yes, all right. The rebound from 1st of July all the way up to 1st of August. So this close about 4 weeks of bounce. So this 4 week of bounce is a corrective rebound rather than the start of a medium-term bullish reversal on the US dollar index, and very low chance that we have not reached a major or medium-term bottoming phase of the US dollar index yet. So on the honest, right now, in terms of the trend technical analysis perspective, coupled with the current news flow, is more supportive of a potential US dollar weakness rather than a US dollar strength or US dollar major bottoming formation that is so far not forming up right now. Right, so that's for more on the FX space. And if you were to look at the FX space right now, based on which are the strongest currency against the US dollar, or you put away that which is the major currency that the dollar is the weakest, is by looking at this 5-day rolling performance dollar against the major currency, right? So which I do it on a daily basis for you guys. So let me pull up the chart again. All right, so let me do it from a 5-day rolling performance basis over here. Okay, so this is the 5-day rolling performance basis as of 14th of August. So this is not 13th August. Let me change it. But give you a couple of seconds to actually do adjustment. But while waiting for the dialog box to pop up, we know that the dollar right now is been the weakest against the sterling pound. So based on the 5-day rolling performance basis, it's down by negative 0.9%. And yesterday, the sterling versus the dollar shoot up to a 4-week high. So that also came within our expectation for those who follow our daily dose on a daily basis, where we have been advocating a potential bullish biasness in terms of the short-term intraday technical outlook since last week over here. And what's interesting over here is that we know that I did mention to you guys that the yen, the dollar yen, that is the dollar versus the yen, is trading in a very complex ascending sideways range, not clearly exhibiting any clear strength of dollar strength against the Japanese yen. But if you look at the dollar yen now is actually doing a catch up. That means the dollar is now starting to exhibit weakness against the Japanese yen finally. All right, so that previously the dollar yen is the dark blue line, which is the dollar yen here is trading pretty much high. That means the dollar is the strongest against the yen among other major currency pair. And because of this ongoing broad-based dollar weakness that is being seen in other major currency pair, is now also dragging down the dollar yen after it broke down a key support level yesterday in a very short term. So for those who recall my daily dose yesterday, we flipped back to a bearish bias on the dollar yen, looking forward to actually coming down towards this medium term ascending range support. So for those guys who have first time following me, what is this medium term ascending range support of the dollar yen? Don't be worried, later I'll share with you in the second segment of my daily dose of what I'm referring to in the current technical configuration of the dollar yen right now. All right, so the key story over here is that the dollar yen now is doing a catch up towards the other currency that has been that the dollar has started to exhibit weakness against the sterling, against the euro, against the Aussie. All right, so the dollar yen now is actually doing that dollar weakness catch up. Something interesting to look out for as well for today's trading session. So now, how about the performance of the major US stock indices? So the major US stock indices, the S&P and the Nasdaq 100, managed to inch out a small gain of 0.32% and the Nasdaq 100 was rather unchanged at 0.04%. Later I'll share with you why the Nasdaq 100 is unchanged, because there was an intraday sell-off in NVIDIA. So I will take it the place that that is not the start of a medium-term bearish reversal on the major stock indices. Why? Because right now we start to see a catch-up in the laggards, which is the Dow Jones Industrial Average and the Russell 2000. So bear in mind, the Dow Jones Industrial Average and the Russell 2000 hasn't even break fresh all-time high yet this year. And very interestingly, the Dow Jones right now, which is our US Wall Street 30 that we have been bullish as well since last week, is approaching its fresh all-time high very, very soon. And based on the short-term technical elements, is still bullish. So later I'll share with you guys on the second segment of the daily dose, what are the new key levels to watch out for on the US Wall Street 30 index, which represent the Dow Jones Industrial Average. So let me share with you guys what causes the underperformance of the Nasdaq 100. If you look at the S&P heat map over here, it was actually the intraday sell-off in NVIDIA and Microsoft. All right, so NVIDIA, Microsoft previously that has been leading the fort due to this AI team play optimism. So yesterday, NVIDIA declined by negative 0.86%. The Microsoft declined by much more. We call it larger magnitude, negative 1.6% over here, and also other related AI, we call it AI indirect related mega cap technology stocks, which is Alphabet, the parent company of Google, down by negative 0.6%, and Meta, the parent company of Facebook, down by negative 1.3%. And what's interesting over here is that the Nasdaq 100 managed to inch up almost unchanged, I would say, because if you look at the performance of Nasdaq is a positive 0.04, is almost unchanged, all thanks to the outperformance of Apple and Amazon. Both of them managed to actually outperform yesterday with a gain of more than 1%. Amazon up 1.4%. Apple up 1.6%. So do you still recall that Apple previously, since the start of the year, has been the laggard behind the mega cap stocks, but mega cap technology stocks, and right now they are actually in the forefront right now, all thanks to a more rosy, cozy relationship, the US White House, where 2 weeks ago I did highlight that Tim Cook, the CEO of Apple, met up with Trump, and he kind of do this kind of agreement to invest more manufacturing plant in US to actually boost Apple production domestically in the US. And also yesterday, there's this positive news flow pertaining to Apple lagging behind the AI race among the mega cap technology stocks, where other mega cap technology stocks has been putting in their hard money or their own funds for AI developments related product or services. So yesterday, Apple announced that they're actually doing expansion into AI robots, home security, and smart display. And because of this positive news flow saying that Apple now is more willing to actually explore AI related devices in the suite of product suite over here, that causes Apple to actually share price to actually rally yesterday. And it did mention that a tabletop robot targeted for 2027, so that's about 2 years for now, as its centerpiece of the AI strategy. All right, and also another news flow is more pertaining to the Asia Pacific stock market. So very interestingly, yesterday the Asia Pacific stock market, if you were to look at from a perspective, where is it? Yeah, so if you look at the Hang Seng Index yesterday, so yesterday during the, okay, let me share with you. There was actually a strong bullish Marubozu candlestick form on the Hang Seng Index, clearing above the 20-day moving average, indicating that the previous 4-day of price consolidation from 7th of August all the way down to 12th of August has really ended. So those who followed my daily dose yesterday, and in fact since the start of this week, we have been a bullish bias on the Hong Kong 33 CFD index, which represents the Hang Seng Index. So this strong push up on the Hang Seng Index came in the second half of yesterday's Asia Pacific session. So if you look at the hourly chart, this is what I mean over here, right? So where was this? Yeah, this jump. This last 3 push up over here, 1, 2, 3, came in at 1:20 p.m. Singapore time yesterday, right? This big jump over here. All right, and today morning there's a gap up, so later I'll share with you what causes this gap up, and there's a slight pullback right now, a bit of profit taking. So yesterday's strong push up also came in line with the push up in the CSI 300 index over here, which is the benchmark China stock market benchmark index pertaining to those top tier A shares listed on the Shanghai and Shenzhen stock exchange. All right, so they actually rallied to actually close to a 3-year high, yesterday by the CSI 300. So what causes this positive enhancement of this positive optimism in the Hong Kong stock market and in the China stock market is due to this further consumer related microfinancing that the China top policymakers will start to implement over here. So this is what I mean. So there was a Reuters report yesterday saying that China pledges more financial support for consumption with loan interest subsidy over here. So China Central Bank didn't cut rates, but what they do over here is that they actually encourage their various province government to actually boost domestic consumption by offering interest subsidy on loans to household and businesses, aiming to reduce borrowing costs and spur spending over here. So basically, uh, that is what on Tuesday, China introduced that it will offer interest subsidy for businesses in 8 consumer services sector as well as for individuals consumer. So eligible business and consumer can receive an annual interest subsidy of 1% point on loans. All right, so it's more like a micro financing interest rate cut on this to actually spur consumer spending over here. So that actually give a boost to this China stock market, and it has a positive feedback loop into the Hong Kong stock market as well. And also upon the closure of yesterday's Hong Kong stock market, we have one of the China mega cap technology stocks reporting their Q2 earnings, which is Tencent over here. So Tencent reported its earnings yesterday after the close of the Hong Kong stock market, and the numbers managed to beat expectation. So reported revenue jumped to 15%, a double-digit jump to 184.5 billion yuan in the second quarter, driven by double-digit growth in most major business segments, including advertising, which it attributed to AI-driven enhancement over here. So basically yeah, so it was actually jumped 50%, so that is about 3% higher than analyst projection. So analyst projected to be coming in at around 12%, so it came in 3 percentage point higher. So that also give a boost to Tencent stock price today. So this is the share price of Tencent as we are speaking right now. They are up by 1.54%, and given that Tencent Holdings Hong Kong share price is one of the major component stock inside the Hang Seng Index and the Hang Seng Tech Index. So if you look at the performance of the Hang Seng Index right now, they are actually up almost unchanged, down by negative 0.05%. The Hang Seng Tech is down by negative 0.33% as we are speaking. So it seems to us that there is some profit taking activities right now on the Hong Kong stock market. So later I'll share with you what are the key technical elements to watch out for and the key levels to watch out for when I cover the second segment of the daily dose. And interestingly, after surging for 6 consecutive session on the Japanese stock market as represented by the Nikkei 225. So for today, the Nikkei 225 is doing a profit taking down by negative 1.27%. But very interestingly, where is it hovering right now, which is at 42,700? It's actually hovering right at our short-term pivotal support, which I highlighted yesterday. So still recall that in my daily dose yesterday, we are looking for a minor pullback. So this minor pullback has taken shape right now as we are speaking. And very interestingly, this pullback is now hovering right above our short-term pivotal support that I predefined yesterday. So what is the levels? Stay tuned for a while. Later when I cover the second dose of the second segment of the daily dose. So one more instrument to cover is finally gold price. Gold price managed to do uptick yesterday. So if I were to look at gold over here, let me pull up the chart of gold. Okay, so gold price, okay, yesterday it managed to do a marginal gain of 0.2%. All right, but it's still hovering at this sideways range configuration, a 3-month plus of sideways range configuration since the current all-time high on 22nd of April. So at this moment in time, gold managed to find a bit of solace due to a weaker US dollar, also driven by the fact that the jawbone by the key US White House administration official, which is the US Treasury Secretary, pushing down also the US Treasury yield as well after his so-called jawbone remarks yesterday to urge the Fed to cut much more than what they actually projected this year, which is only a 2 interest rate cut of 50 basis points each. So that actually provides some support for gold, but from a technical perspective, it's still trading in a sideways range. So unless certain levels has been taken out, then we could see a much more forceful bullish momentum coming into the gold price. So that'll cover the short-term intraday technical outlook for gold and the key levels to watch in the second segment. All right, so now let's now move on to the second segment. I covered much ground on the first segment. Okay, one more thing I want to highlight over here is there's a key data release pertaining to the Aussie dollar as well. So the Aussie dollar continues to shoot up higher as portrayed in our short-term technical outlook, where we expect a bounce at the 64.80. So the Aussie dollar now is trading much higher at the 65.40 level. And also this morning, the Aussie dollar is pretty firm as well, also thanks to a pretty much resilient Aussie dollar labor market. So that actually allows the RBA to be not so dovish in terms of interest rate cuts, because the labor market is still holding pretty much firm or resilient. So employment change data came in within expectation. So it came in at 24.5k job added for the month of July, almost in line with the 25k job added that what market is expecting. But what's interesting over here is that the unemployment rate managed to inch down lower from 4.3% to 4.2%. So that also came in within market expectation as well. So that causes the Aussie dollar to remain resilient for today's Asia session after that strong bounce up exposed RBA at that test at that 64.80 short-term pivotal support level, which I highlighted previously since the start of this week. All right, so now without further ado, now let us move on to the second segment of the daily dose, which is the intraday technical outlook on these various broad-based cross-asset classes. But before that, let me expand my screen. All right, so let us start with the FX market first, as usual. All right, so the FX market, let us start with the euro dollar. So if you still recall, euro dollar, we have first resistance zone at 116.80, 117.05. Finally, it managed to break up above it over here, and now trading in a sideways range configuration. All right, sideways minor. Okay, let me delete this. Okay, let me delete this. All right, so right now it's trading inside this sideways range configuration since the start of the US session yesterday. All right, so this range configuration over here. So overall, what we could expect over here is that yesterday the price action do a higher high. All right, there's a higher high, and in line with the higher high that is being made on the RSI as well. All right, so right now the RSI has really tried exit from the overbought level that actually represents a form of minor consolidation taking shape on the euro dollar. So the RSI has still a bit of room more to go before hitting the oversold level. So I do expect a bit of minor consolidation to take shape in the start of today's European session after yesterday's intraday strong push up above our first resistance level at the 116.80, 117 figure level. So right now, the pullback area to watch out for today during the start of the European session in first step will be at 160.80, 116.80, 116.60 level. Okay, this region over here, as you can see on the chart. So I will have a tighten up short-term pivotal support level for a potential maximum pullback. So as long as the maximum pullback didn't break below 116.30 short-term pivotal support level, which is confluencing with the 20-day and the 50-day moving average, I will still have a bullish bias outlook on the euro dollar as it potentially seek out the next resistance zone after the minor pullback has ended towards 117.70, 117.90 next, which is the 1.236 Fibo extension in this ongoing bullish impulsive up move sequence since the start of 1st of August. Above 117.90 exposes the next intermediate resistance at 118.30 over here, which is the minor swing high area of 1st of July before that 4-week plus of corrective decline takes shapes over here. However, only a bearish breakdown below 116.30 and hourly close below it that would invalidate today's intraday bullish bias after the minor pullback has taken shape to seek out a much more pronounced minor corrective pullback to expose the next near-term support level at 115.90 next over here. So that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar managed to actually do the outperformance against the euro dollar, like I explained earlier on in my 5-day rolling we call it performance chart, which I shared earlier. So it hit our first hit the resistance level at 135.90, 136.10, and right now the RSI has really exited from the overbought level. All right, over here. So previously there is no bearish divergence as well. Price action shaped higher high. The RSI also shaped a higher high. So now the RSI is really exit from the overbought level, so indicating there could be some form of minor pullback taking shape. So minor pullback support zone to watch out for today will be at 135.55, 135.20, this level here, maximum 134.95. So that will be my adjusted short-term pivotal support level, which also confluence with the 50-day moving average and as well as the lower limit of this ongoing minor ascending channel taken from the low of 1st of August. So as long as this minor pullback didn't surpass below my adjusted and tightened short-term pivotal support on the sterling dollar for today, which is 134.95, I will still maintain a bullish bias on the sterling dollar. Above 136.10 exposes 136.50, 136.80, which is now confluencing with the upper limit of this ongoing minor ascending channel and the 0.764 Fibo extension of this ongoing bullish impulsive up move sequence since the low of 1st of August. Above 136.80 exposes 137.35, which is the one-time Fibo extension of this ongoing bullish impulsive up move sequence from the low of 1st of August, and so confluencing with the minor congestion area of 30th of June and 2nd of July this year. Only a bearish breakdown and the hourly close below 134.95 that would invalidate today's bullish bias. So a breakdown below 134.95 will invalidate today's bullish bias to kickstart a minor corrective decline sequence again, revisiting the 20-day moving average, which confluencing with the next near-term support level at 134/133.80 level. So that will be the sterling dollar. Next up will be the Aussie dollar. So the Aussie dollar managed to stage a bullish breakout above our first resistance zone, which is at 65.40, 65.60. Now turns into a pullback support area over here. So given the fact that the RSI now has exited from the overbought level, and potentially right now there could be a minor pullback taking shape. So minor pullback first support level to watch will be at the 165.40 level. Yesterday's breakout level now turns into a pullback support that was tested during the late US session yesterday. And pivotal support level, I will tighten it higher for today, which confluence with the 20-day and the 50-day moving average, and as well as the minor swing low of yesterday at 65.15. So as long as this minor pullback didn't surpass below 65.15 tighten short-term pivotal support, I will still maintain my bullish bias on the Australia dollar as it continues to evolve within this expanding wedge range configuration since the low of 23rd of April, with next intermediate resistance to watch on the intraday basis, 65.80. A breakout above 65.80 exposes the 24th of July minor swing high at 66.20. Only a bearish breakdown below 65.15 will negate today's intraday bullish bias view for it to slide down lower towards 64.80. Below it, seek out 65.40, which is a Fibo retracement level as well. If you do the ongoing bullish impulsive up move, minor bullish impulsive up move sequence from the low of 1st August all the way up to today's intraday high. Okay, that also confluence with the 76.4 Fibo retracement at the 64.50 and the 64.80 confluence with the golden ratio at 61.8. Right, so that's for the Aussie dollar, maintaining my bullish bias in any form of a pullback. They may take shape first, holding above a key Titan short-term pivotal support for today at 65.50. Next up will be the dollar yen. So on the dollar yen, let me take you through the longer term chart first, which is the daily chart. So this is what I mean by a ascending range configuration since the low of 22nd of April. All right, so there is a failure bullish breakout that has taken shape on 31st of July prior to the release of that US non-farm payroll data, where price action reintegrate back into this ascending range configuration after that failure bullish breakout of it, and also a failure bullish breakout above the key 200-day moving average. So right now it's actually attempting to retest the lower limit of this bearish of this ascending range configuration at around the 144.50 level. Okay, so and if you look at the daily RSI, the daily RSI has shaped a bearish breakdown. All right, so take a look at this parallel ascending trend line. All right, so this parallel ascending trend line on the RSI, daily RSI, is very similar in parallel with the ascending trend line of this ascending range configuration, this i.e. this ascending range configuration support. Put it is in parallel. So in parallel, the RSI has really staged a bearish breakdown as we are speaking right now. So giving it a bit of probability that there will be a potential ascending range breakdown of it as well, given the fact that the RSI is a momentum indicator, and anything that is momentum has a leading impact on the raw price action. All right, this is something I want to share with you guys over here. So overall, the technical elements on the dollar yen is more inching up towards on the bearish side rather than the bullish side as we are speaking. So how about on a daily intraday time frame basis? Means that's the daily chart. It takes longer time period to form, multi-week to multi-month. But how about the intraday movement for today, which is the hourly chart? So the hourly chart has really staged that breakdown below our support level that we highlighted yesterday. So this is the minor range support that has formed since last week, 5th of August. So it's that now has a clear breakdown below it, this level. All right, so this will be a pullback resistance for today. Okay, this zone here, 14680, 14710 level. So as we are approaching the next resistance, next support level at 14585, which is the minor swing low of 24th of July and 10th of July over here, right? But what's interesting over here is that the RSI has hit the oversold level, but upon hitting the oversold level, this is the hourly RSI, it does not form a bullish divergence. It continues to shape a lower low as well in terms of the price action. So indicating that yes, oversold, there could be a bit of minor bounce. So this minor bounce may not lead to a more pronounced mean reversion rebound on the intraday basis, given there is no bullish divergence that is being formed on the hourly RSI. So there could be a potential minor bounce. So minor bounce resistance to watch out for. The first zone will be at 14680, 14710, but I don't want to put my pivotal support to be so tight at 14710. I'll put it at the 20-day moving average over here that is confluencing with this congestion graphical area at 14785. So I will tighten my pivotal resistance downwards from 14875 to 14785 and maintain a bearish bias on the dollar yen in any bounce that they may take shape thereafter due to the oversold reading seen on the hourly RSI, and maintain my bearish bias for the next near-term support level to come in at 14580. A breakdown below 14580 may take us down towards 14510 next, which is the former minor swing high of 3rd of July now turns into a minor pullback support area. Only a bullish breakout above 14785, which is above the 20-day moving average, that would invalidate today's bearish bias for it to squeeze up towards the upper limit of that ascending range configuration. Again, the medium term ascending range configuration, looking out for the next intermediate resistance to come in at 14875, and even the key resistance at 14950, pardon me, which confluence with the 200-day moving average. All right, so still maintaining my bearish bias in any bounces on the dollar yen using a tightened adjusted short-term pivotal resistance for today at 14785, which confluence with the 20-day moving average, acting as a similar resistance level as well. Next up will be the major 6 stock global indices, starting with the Asia Pacific, Hong Kong 33 over here. So the Hong Kong 33 managed to hit our first resistance, hit almost the resistance level at 25,890, which I highlighted yesterday, and now shaping that pullback over here. So that pullback also come in place when the RSI hit a extreme overbought level on a hourly basis over here. So this extreme overbought level is the highest in the last 3 months. All right, so that's pretty much nature after hitting a extreme overbought level, where the RSI now managed to work out from this extreme overbought level by exiting from it at this juncture. So right now, given the fact that he's just exited from it, and the next, because there's a parallel ascending trend line support level over here. Oops, give me a minute, let me. Okay, so there is still some more room to actually go down lower to this support area here. All right, so that means IE, then there's this congestion area here as well on the hourly RSI. So using RSI as a kind of a leading technical indicator in relation to see how the price action may progress on the Hong Kong 33. So this indicates that the ongoing pullback may extend further, given that it hasn't hit the parallel support level on the parallel support area and the parallel ascending trend line on the hourly RSI over here. So what you could see over here is that for a better risk measurement perspective, I will have this tighten short-term pivotal support zone to watch. So the lower limit will be at 25,420 level over here. So this will be my tighten short-term pivotal support area to watch, 25,545, 25,420. Still maintain my bullish bias on the Hong Kong 33 over here. Looking out for the potential next uplift to come in after this pullback, minor intraday corrective pullback have ended. Next resistance level to watch, 25,890, followed by 26,090, which is the 1.618 Fibo extension taken from this ongoing bullish impulsive up move sequence since the start of 1st of August. Only a bearish breakdown below 25,420 that would negate today's bullish bias to see the minor corrective pullback shaping a deeper decline, exposing the next near-term support at 25,230, followed by 25,055, which confluence with the rising 20-day moving average. So that's for the Hong Kong 33. All right, next up will be the Japan 225. So the Japan 225, yesterday I do mention that after that there's could be a potential pullback at or that around the 43,560 resistance level, almost hit it during the start of the European session yesterday, and before that pullback take shape, and now the pullback is now coming very close to my Titan short-term pivotal support that I highlighted yesterday, which is 42,513, 42,460, which is the former all-time high that was printed previously in July last year, and also confluence with the former minor swing high recently this Monday. And what's interesting over here is that the hourly RSI now has finally float back to the oversold level. So given that the price has really fallen quite substantially in today's Asia session, coupled with a oversold reading on the hourly RSI, we may be coming very close to a tipping point of the minor corrective pullback that has taken shape yesterday since the start of the European session. Right, so still no change, still maintaining my bullish bias right now, right above our short-term pivotal support level at 42,513, 42,460. Two key resistance level to watch for today, as we maintain our bullish bias. First resistance level will be the former minor swing low area of yesterday's US session that got taken down, 43,100, followed by 43,560. So let me put it in writing. All right, only a bearish breakdown below 42,460 that would invalidate my bullish bias view for the Japan 225 for today, representing a Nikkei 225, to seek out a more deeper minor corrective pullback towards 41,975, followed by 41,610, maximum 41,275, which confluence with the rising 20-day moving average as well. So that's for the Japan 225. Looking out for 42,513, 42,460 as my short-term pivotal support, which I indicate yesterday, to maintain that bullish bias. And given the fact that the current minor corrective decline may heavily reach a tipping point, where the hourly RSI is now at the oversold region. All right, next up will be the European stock market, the Germany DAX, which the Germany 30, which represent the German DAX. So the Germany 30 and German DAX continues to be lagging behind against the other major stock indices, rather lackluster over here. So yesterday, if you look at the cash market on the German DAX, they only closed marginally higher at 0.67. So from a technical perspective, on the Germany 30 CFD index, price action continues to hover above the 50-day and the 20-day moving average, but still can't break out above last Thursday minus swing high, which is at 24,370. So no change in terms of the levels. So unless we have a clear bullish breakout above 24,360, then I would tighten my pivotal support to the 20-day moving average over here, which is acting as a first support level to watch out for as the European session kickstart thereafter, which is 24,100. So still using the minor V-shaped recovery that has taken shape this Tuesday, which is so confluence with the 50-day moving average, still using that 23,990 short-term pivotal support as of yesterday, maintaining my bullish bias on the Germany 30, watching out for a bullish break above 24,360 before taking it up higher to retest the minor swing high of 24th of July and 28th of July, acting as the next intermediate resistance at 24,560. Above it may expose to a fresh all-time high at 24,730, which confluence with the 1.382 Fibo extension of this ongoing potential impulsive up move sequence since the start of 1st of August. Only a bearish breakdown below 23,990 will invalidate today's intraday bullish bias on the Germany 30 to seek out a deeper minor corrective decline sequence, exposing the next near-term support level at 23,790. A breakdown below it may see a deeper slide towards 23,600 next. So that's for the Germany 30. Onward next will be the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So finally, it managed to clear above our resistance level at 44,780, now turns into a pullback support level as the RSI now attempt to actually potentially exit from the overbought level. But upon potentially exiting out from the overbought level, that it may take shape, given that it's already hitting the overbought level, and this overbought level is the kind of the highest in the highest since June over here. All right, so far no bearish divergence. Hourly RSI going to shape a higher high over here, so there could be only a minor pullback. So minor pullback support level to watch out for today will be at 44,780. Maximum will be my Titan short-term pivotal support area here at 44,470. That will be my Titan short-term pivotal support. Former minor swing high on 7th of August, previously hit, do a bit of minor congestion before breaking out yesterday, and that also confluence with the 20-day moving average as well, giving it a rather important psychological level to watch for the bulls to maintain in any chance of any minor pullback that may take shape. So as long as this minor pullback didn't surpass below 44,470 Titan short-term pivotal support level, I will still maintain my bullish bias on the US Wall Street 30. Next resistance level to watch will be the current all-time high at 45,100 that was tested earlier in July. Can't have a proper break above it, late July, 28th of July. So this 45,100 was being made in December last year, right after the US presidential election results. Above 45,100 potentially takes us up higher for this bullish impulsive up move sequence to extend further in first step towards 45,455, 45,520, which is a Fibo extension cluster level. The nearest one is the 1.382, taken from this ongoing bullish impulsive up move sequence since the start of 1st of August. Only a bearish breakdown below 44,470 will start to see another round of choppy corrective decline sequence unfolding again to revisit last Friday minus swing low and this Tuesday minus swing low, confluencing at 43,990. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 yesterday print a marginally fresh all-time high before trading sideways at 6,470, 6,480. That's the resistance level that we highlighted as well. So with that, the hourly RSI has really started to exit from the overbought level. So upon exiting from the overbought level, there is no bearish divergence over here. So if I were to draw in a parallel ascending trend line support level, so at this point in time, the RSI may have still more room to go to actually hit this parallel ascending trend line support, indicating that there could be a minor pullback taking shape later. All right, so minor pullback support level to watch will be at 6,430, which is almost the lower limit of this minor ascending channel that is still in place since the 1st of August. For today, I'll have a tighten short-term pivotal support level, which is the minor swing high area of 7th of August and 11th of August, previously tested twice, do a bit of consolidation before that strong push up on Tuesday, expose CPI data release, and you do the FIBO retracement. That also came in very closely to the 23.6% FIBO retracement as well. So using an adjusted Titan pivotal support level for today on the S&P 500, 6,405. Any chance of a minor pullback, they managed to hold above 6,405. We will still maintain my bullish bias on the SPX 500 above 6,480, take us up higher towards 6,517. Followed by 6,540, which is the upper limit of this minor ascending channel from the low of 1st of August, and a FIBO extension cluster levels as well. So that's for the S&P 500. Only a breakdown below 6,405 will negate today's bullish bias to see a deeper minor corrective decline to revisit the minor swing low of this Tuesday at 6,370 that confluence with the rising 20-day moving average. Next up will be lastly will be the Nasdaq 100 over here. So the Nasdaq 100 did a squeeze up as well over here. So far we start to see a similar higher high on the price section over here. The RSI has sorry, mate, this is the Dow Jones, sorry. This is the Nasdaq 100. All right, pardon me. So Nasdaq 100 over here, the RSI has started to see to actually exit from the overbought level. All right, yesterday, and why we could draw a parallel ascending trend line. Okay, there's still a bit of room to go before hitting the parallel ascending trend line support. All right, still a bit of room more to go. Okay, indicating that there could be a minor pullback taking shape thereafter on the Nasdaq 100. So pullback support level to watch will be this very clear former minor swing high of 31st of July, tested on 12th of August before that bullish breakout exposed US CPI data release at 23,710. So I will have a slightly lower adjusted pivotal support below 23,710, which is 23,560, which is the minor swing low area of 12th of August before it rallied up. Okay, upon the release of the US CPI data. So 23,560 will be my Titan short-term pivotal support level in any minor pullback. As long as it surpass below 23,560, we'll still maintain a bullish bias on the Nasdaq 100. Above 24,020, that was almost reached yesterday, take us up higher towards the next resistance level at 24,185, 24,240, which confluence with the intersection of this minor ascending channel from the low of 1st of August and the upper boundary of the medium-term ascending channel from the low of May this year. Only as well as a FIBO extension cluster level as well at 24,185, 24,240. Only a bearish breakdown below 23,560 will invalidate today's bullish bias move to see the extension of this minor corrective decline to retest 23,295, which is the minor swing low area of 8th of August and also the rising 20-day moving average. All right, so that sum up the Nasdaq 100 intraday technical outlook and all the intraday technical outlook of the other major global stock indices. Let us now put our attention towards the commodities market, which is gold XAU/USD. So gold yesterday we have a neutrality stance, so we turned neutral between 3,360 and 3,334. So yesterday price actually managed to clearly bounce tested the 50-day moving average and staged a bounce off it again. So far the hourly RSI still managed to hold above a parallel ascending trendline support, hasn't hit the overbought level yet. So given the fact that there is some form of short-term bullish momentum coming into play, where Gold XAU/USD could float upwards towards the upper limit of that medium-term sideways ridge. So using first support level to watch out for today will be the 50-day moving average over here. Okay, that is close to the 3,350 level, first support level to watch. Pivotal support still remains the same at this minor V-shaped low level that has been seen since 12th of August bounce, 3,334. So 3,334 short-term pivotal support flip to a bullish bias within a medium-term range configuration. Intraday resistance level to watch 3,383 followed by 3,402, where price action rejected the boost since 8th of August. Only a breakout above 3,402 may seek out the price movement towards the upper limit of the medium-term range configuration at 3,439, 3,447, which is the minor swing high of 23rd of July and the minor swing high of 13th of June. Only a bearish breakdown below 3,354 that would invalidate today's bullish bias and for it to float down towards the lower limit of this medium-term range configuration, exposing the next near-term support level at 3,310. Below it may seek out the lower the minor swing low of 1st of August at 3,283. So that's for Gold XAU/USD. And lastly will be the West Texas crude oil over here. Okay, give a minute for me to call up the chart. Come on. Give me a couple of seconds because it seems to be hanging right now. Okay, good. West Texas crude oil. Okay, so the West Texas crude oil continues to inch lower over here and hit our first support level at 62.50. So far the hourly RSI continues to shape a lower low as well. There's no bullish divergence, indicating that this bearish momentum still remains intact for West Texas oil as we head into a key risk event pertaining to oil market, which is this Friday, tomorrow meeting between US President Trump and Russia President Putin to discuss a possible ceasefire deal with Ukraine, given that the Russia-Ukraine war has been ongoing for more coming to the 4th year. So if there could be a ceasefire being so-called discussed or even leading to a potential ceasefire in the next few months, potentially there could be a removal of sanction on Russia oil. So that means Russia oil is able to flow more freely into the global oil market, that actually increase oil supply. And given the fact that OPEC Plus member is now doing production hike, not production cuts, so that could actually dampen oil prices much further. So with that, from a technical perspective and a fundamental perspective, oil prices may see further room on the downside potentially. So with that, I will tighten my short-term pivotal resistance level for today. Okay, to this level here. Okay, close to yesterday's minor swing high of 13th of August that got rejected before printing a minor lower low. All right, so this level here will be at 63.85. Okay, let me change this. Okay, give you a couple of seconds for it to come up the dialog box, because sometimes it tends to be a bit slow while we are doing the webinar. Okay, come on. Okay, finally it's up. Okay, so this will be my new Titan short-term pivotal resistance to maintain our intraday bearish bias on the West Texas oil. So that will be 63.85 over here. Okay, so this level will be a normal next resistance level to watch. Okay, let me tidy it up. Okay. Okay, so let me remove this. remove this, remove this, remove this, remove this. Come on. Oops. Okay, I'm now trying to put in the text of 6630. Okay, why is not coming? Gosh. Okay, correct. 6630. Okay, so next support level will be at 6130, which is that gap up over here. Okay, that gap up previously that was formed on the 30th of May, and after below 6130 will be this very clear minor swing low area. Okay, stretching out from previously 15th of May, 23rd of May, 30th of May. Okay, so what's this level? 60-60. Okay, 60-60. And if we were to look at the way the price action that is evolving right now on West Texas crude oil on the intraday basis on the hourly chart, that also potentially could be the lower limit of this ongoing minor descending channel, since the important high of 31st of July. Why it's important? Because that was the onset of the Israel Iran we call it dispute over here. So let me draw the parallel ascending trend line, parallel descending trend line for you guys to see. Okay, that's tested twice. So even that's way below it over here. Okay, so far taking things one step at a time. Tighten my short-term pivotal resistance for the West Texas oil to 63.85. Next support level towards 61.30. Below it will be 60.60 in first step. However, if we start to see a bullish breakout above 63.85, that would invalidate the bearish bias and see a squeeze back up for a mean reversion rebound scenario to take shape. 64.85, 65.60, maximum 66.30, which confluence with the 20-day moving average, I think, as a similar resistance level as well. All right, so that sum up the intraday technical outlook on the West Texas oil. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So right at 2 p.m. Singapore time, we will have the release of that GDP growth rate, preliminary GDP growth rate for UK for Q2 at 2 p.m. and that could influence the sterling dollar, the sterling crosses, and even the UK 100 CFD index. Then going into the US session over here will be PPI over here. So PPI is because that's a tier 2 inflation data. So at 8:30 p.m. PPI, and heading towards the rest of the US session will be rather quiet. And at 2 a.m. Singapore time, we have a US Federal Reserve Barkin speaking over here. And also for those who are looking at the Hong Kong 33 CFD index, so today we'll have 3 more China mega cap technology stocks reporting after the closure of the Hong Kong stock market. So what are they? So let me share with you over here. Okay, so today will be Thursday. So if you go down, Alibaba, NetEase, and JD.com. So these 3 mega cap China technology stocks will be reporting their Q2 earnings after the closure of the Hong Kong stock market today. That could have an influence on the Hong Kong 33 CFD index during the European session. All right, over here. So with that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off. So before I go, a bit of heads up. Tomorrow I'll be away. So tomorrow there'll be no Daily Dose of Market Insights on Friday, which is 15th of August. And Daily Dose will resume on next Monday, 18th of August. So I wish you guys a great day ahead and a restful and productive weekend. And we shall speak again on next Monday, 18th of August. Thank you.